Hi, my name is Brendan Bardick with thebardickgroup.com here in Denver, Colorado. And today I'm going to be talking about how to figure out your home payment with insurance and PMI. Now, PMI stands for Private Mortgage Insurance. Private mortgage insurance is going to be required by certain lenders based on certain terms of how much you're going to be borrowing on a property. Now, the industry standard is that if you're borrowing more than 80% of the property, the lender is going to require that you have private mortgage insurance on that lien. So that's one of the things we're going to discuss. The second is figuring out the different options on how to figure out your house payment with PMI and insurance. Now, you could first of all contact a lender, a mortgage broker, a licensed real estate agent, and they could do all these calculations for you and be able to give you a detailed analysis of how your payment would be broken down. The second is to go online. There's a number of different calculators available, and you can type in the terms of if you want to do a 15-year mortgage, a 30-year mortgage, all of those different situations, and it'll come out and break down exactly what your home estimated payment would be per month. And then the third is to do the calculation manually. Now, this is one of the more difficult ways of doing it, but you can definitely do it yourself. In calculating that formula, the first thing you're going to need to do is need to know your loan to value ratio, so LTV. Your loan to value ratio basically comes down to how much you're borrowing against how much cash you're bringing to the table. So, for example, if you are doing a, let's say, 30-year loan and you have a 6% interest rate, then you're going to be able to get the numbers for the formula that are required to be able to figure out over the course of that entire term of the loan how and what would your estimated monthly payment be. The second is to figure out what your PMI cost is going to be. So if you are required to have private mortgage insurance because you are borrowing more than 80%, then you're going to first of all take a calculation based upon what that lender charges for private mortgage insurance. You're going to then multiply that times the lease or the term of your lien, and then that's going to give you the indication of what the monthly cost would be, or then you would divide it by 12, and that would give you the monthly cost of what it would be every month. The third piece of the equation is going to be how much you're going to need for homeowners insurance coverage. So with homeowners insurance coverage, you're going to figure out what the entire cost for the total loss of your property and all your valuables are going to be. And then you can talk to several different home insurance companies to give you different rates. Once you have all of those three figures together, you will then add them up, and then that will give you your total monthly house payment. Again, my name is Brendan Bardick with thebardickgroup.com. Thank you so much for watching.